Hey, welcome back. Today, we're jumping into a really fascinating and, pretty speculative analysis of MicroStrategy. The company that's basically become a huge proxy for Bitcoin on the stock market. We're going to break down an argument for what could be a massive long-term opportunity, but one that is, right now, walking on a razor's edge. All right, let's get into.
So let's just start with the big idea, the hook for this whole thing. The analysis kicks off with a simple but really powerful question. What if you could buy Bitcoin, but at a 16% discount? I mean, it sounds almost too good to be true, right? But the argument is that this is exactly the deal the market is offering through MicroStrategy stock, MSTR.
And this quote right here, it just perfectly captures the core claim. The idea is that the discount on the Bitcoin that MicroStrategy holds on its books is so big that you're essentially getting the company's entire software business, all its customers, all its revenue, for absolutely free. That's the wild idea we need to unpack.
So how is that even possible? Well, let's dig into what the source material calls the market's big glitch. We're going to look at the surprisingly simple math behind this whole claim.
Okay, so how do they even get to that number? It actually comes down to a really basic calculation. MicroStrategy holds a just staggering amount of Bitcoin. If you take that massive pile of crypto and divide it by all the MSTR shares out there, you find that each individual share is backed by 0.00215 Bitcoin. That's the hard asset value right there.
And this is where it gets really wild. Check out the disconnect here. Based on the Bitcoin price when this analysis was done, that slice of Bitcoin per share gives MSTR a fair value of about $187. But the market was only trading the stock at $157. That gap, that's a 16% discount. You're literally buying $187 worth of an asset for just $157.
Okay, hold on. The immediate and, very smart question here is, what's the catch? Because a company isn't just its assets, it also has liabilities, and MicroStrategy is well known for taking on a ton of corporate debt to buy some of that Bitcoin. So the analysis tackles this head on. The argument goes like this. First, the revenue from their actual software business is more than enough to handle the interest payments on that debt. No problem. Second, their strategy has actually shifted. Now they mostly use new shares, not debt, to buy more Bitcoin. So the bottom line, the key takeaway, is that the market already knows about the debt. It's already priced in, which means that 16% discount we just saw is a real net benefit. All right, so let's shift gears from the here and now and look at the long game, because this isn't about a quick flip. The whole analysis is laser-focused on the year 2026. So, why 2026? Well, it boils down to two really powerful forces that look like they're about to collide. The first force is something that's almost like clockwork in Bitcoin's history. It's called the halving. Every 4 years, the amount of new Bitcoin being created gets cut in half. And just look at the pattern. After the 2016 halving, the market peaked about 18 months later. After the 2020 halving, same thing, 18 months later. Well, the last halving just happened in April 2024. And if history is any guide, that points to a potential market top somewhere between late 2025 and the middle of 2026. But look, a supply shock from the halving is only half the equation. For prices to really move, you need a huge wave of demand to come crashing in. And that's the second pillar of this whole 2026 theory, the belief that a wall of institutional money, bigger than anything we've ever seen, is getting ready to pour into this market.
And this quote from the source material just says it all. The launch of those Bitcoin ETFs earlier this year, that was a huge deal for sure. But according to this analysis, that wasn't the final destination. It was just the first crack in the dam, just opening the floodgates for what's coming next.
So what's actually happening to make that possible? Well, behind the scenes, the big banks are basically building all the financial plumbing needed for that huge conservative money to finally flow in. We're talking about things like regulated custody solutions, clearer rules from governments, and brand new products that will let gigantic pension funds and even sovereign wealth funds invest trillions of dollars with way less friction than ever before.
Okay, so the long-term story sounds pretty compelling, right? But let's pump the brakes for a second and bring it all back to today, because the short-term reality is, well, incredibly volatile. The analysis really hammers this point home. Right now, this stock is walking a knife's edge. And yeah, this one number tells you everything you need to know about the kind of pain we're talking about in the short term. A 51% drop from its recent high. It's this kind of brutal sell-off that the analysis argues is creating the long-term opportunity. But man, it also shows you the immense risk involved.
In moments like these, specific technical price levels become unbelievably important.
The analysis points to one specific price point that it calls the line in the sand, a level that is basically make or break for the stock right now.
And that critical number, the price everyone is watching, is $155.61. That was MSTR's 52-week low. Whether the stock can hold this level is seen as the single most important test for this whole bullish idea in the immediate future.
So what happens if it breaks? Well, the prediction is a kind of domino effect. First, that key structural support is just gone. That would likely trigger a whole wave of automated sell orders from trading algorithms, stop losses. The result? A very fast drop, a flush down, probably towards that big psychological number of $150. Now, it's really important to note that the analysis ties this to a scenario where Bitcoin itself also loses a key support level. MSTR's fate and Bitcoin's fate are, of course, completely linked.
So, given this fork in the road, a potential bounce or a nasty breakdown, the analysis lays out a really clear two-path playbook for how you might approach this whole situation.
Let's break this down. First, on the left, you've got the green day or reversal scenario. The trigger here is MSTR getting back above $162.75, proving that buyers are stepping back in. The action would be to get into a position with targets in the high 160s to low 170s. Okay, now look at the red day on the right. The trigger is that break below the critical $155.61 level. But look at the action. It's not panic sell, it's wait, let the sell-off happen, and then buy the dip in that $142 to $150.
And this quote just perfectly sums up that counterintuitive red day strategy. It's about seeing a total capitulation sell-off not as a reason to panic, but as a golden opportunity to get in at an even bigger discount. The advice is literally to load up the truck, all while keeping that long-term 2026 vision in mind. And one last thing. For traders with a, let's say, very high tolerance for risk, the analysis does mention a tool called MSTU. This is a 2x leveraged ETF. Think of it like a supercharger for MSTR. It's designed to double the daily returns, which, and this is crucial, also means it doubles the risk and your losses on the way down. It's a powerful tool, but it cuts both ways.
And that really brings us to the final question, the one that sits at the very heart of this entire analysis. Is MicroStrategy offering a historic discount right now, a true generational buying opportunity? Or is it a dangerous value trap that's about to fall through the floor? The playbook we just went through is an attempt to navigate both of those futures.